Hey, what's going on, guys? Welcome back to Marriage, Money, and Mindset. We are your hosts. I'm Jared.
And I'm Alexis.
And we are back for episode 6. Episode 6 of Marriage, Money, and Mindset. Got a few announcements we want to make before we kick off this video. First and foremost, thank y'all for watching episode 5.
Thank you.
On the keys to success and failure in a marriage. I hope y'all got some value out of it. If you haven't checked that video out, it's archived. Go back, watch it, like, share, comment, subscribe, take some notes, all that good stuff, right? Another comment, we want to thank, I can't talk today. I want to thank Alex Seal, TPE, right? We had the latest video we shot with him on his channel.
We talked about sacrifices. Yeah. It's called TPE on YouTube. Mm-hmm. It stands for the Pivot Experience. Yeah. So go like and subscribe to his channel as well. Oh, yeah. The last episode that we did with him, we talked about sacrifices like we just mentioned. That's a good one. Yeah, we got pretty vulnerable in that episode.
Yeah, talked about sacrifices we made, currently making, things that can help you get to your, goals in life. So it's a good video. Y'all go check it out. Subscribe to this channel as well. We want to thank our new subscribers on YouTube and followers on IG. Thank y'all. Yes, we getting up there, guys. We appreciate y'all support. Y'all see the shirts too, by the way. You know what I'm saying?
Check me out.
Hey, man. So look, like, share, comment, subscribe. You see it? Click on subscribe on your computer screen, on your phone. Y'all help us out, right? Okay. How you doing anyway, man? This the end of this beginning of the month, guys. We entering the fourth quarter of 2023. Man, we just got out of work too, guys. We just getting home, getting situated, getting set up for y'all. So, it's like quality time. I don't even know if I asked her how she been. So how you been?
I've been doing good. This has been a very busy week. It seems like we just been in passing, like good morning and good night.
I don't even see her no more.
I know.
Man. How you slept last night?
I slept great.
I slept good too. Yeah, okay. So look, guys. This is going to be a 5-part series. So we're in the fourth quarter of the 2023. We're on the last leg of the year. 2023 is almost a wrap. So look, what we want to do this month, we want to dedicate the entire month to the stock market, right? That's something that we invest in. We started investing heavy back in 2019, the end of the year. That's when we got serious with it. Like, actually, we were already investing in the stock market. But obviously wasn't
educated.
We were oblivious to what we were even doing. Yeah. I didn't even know what we were invested in, right? Through something called a deferred compensation with my employment, they offer diversified portfolios that you can invest in. I've been putting money in there since day one. Had no idea what I was even invested in, right? But it wasn't until 2019, right before the pandemic hit, that we both decided that we wanted to, figure out how to invest in the stock market. And man, I tell y'all guys, look, that investment vehicle has been great for us thus far. We realize it to be a very powerful vehicle that can help you elevate to that level of wealth that you are attempting to obtain. So what we want to do, like I said, this month we want to dedicate to that particular investment vehicle. How to plan and invest in the stock market is what we titled this video, right?
That's part of paper assets. There's different asset classes. Stocks is the paper assets. Yeah.
It's, like I said, we're going to hit on other vehicles that we invest in as well, like real estate investing, crypto investing. But, the stock market, that's one, like I said, that's one that we've been very, very, active in over
especially during this market.
Yeah, exactly.
Like we have different investment vehicles, and real estate being one of them, but we're paused on real estate right now and acquiring new real estate because of the market.
Scarce right now, man.
Those interest rates are out the roof.
Market's terrible with the rates. I mean,
so we're taking advantage of the stock market.
Yeah, I mean, again, real estate portfolio is doing this thing, building equity every month,
investing regularly.
Right. So, but of course, obtaining more real estate down the road is always in the plan. But anyway, guys, so look, before we kick it off, we always got to state it. We are not financial advisors. What we're doing for y'all is educational purpose only. So take our words with a grain of salt.
And do your own research.
And do your own research, right? Mm-hmm. All right, so look, we're going to kick it off. We're going to get it going. How to plan and invest in the stock market, right? So before we start, guys, look, the very first thing we want to do, I like to define everything, all right? I like to go and define words just so you can understand what it is we're even talking about. We talked about that in the last video, defining words. So look, so we're going to define the stock market. So what is the stock market, right? Basically, I'm gonna read it for you guys, all right? The stock market is a financial marketplace where investors buy and sell ownership shares in publicly traded companies, right? Mm-hmm. So think of it like, I like to use the, farmer's market, grocery store analogy. When you go into a market, we have H-E-B out here in Beaumont, Texas. I don't know if y'all have an H-E-B where you're from,
Walmart.
But anyway, Walmart. There we go, Walmart, right? Which, by the way, is a public traded company. But anyways, so you walk into there, and there's different categories that you can shop. There's produce. There's menswear. There's women's wear, etc. Mm-hmm. Think of it like that. That's almost a good way to kind of use an analogy as a stock market, right? Because you have different categories of things, or even a farmer's market. There's buyers, there's sellers of produce. So it's almost one of those. Usually people use that as like an analogy. That's a way to think of the stock market. Basically, it's a place where you can go and acquire a piece of a company, right? Yeah. In the form of shares. You want to elaborate more on that? Anything else you want to say?
No,
I think I pretty much hit on that.
Right.
Yeah. So basically, that's the stock market, the gist of it, right? And then y'all heard me mention shares, right? Okay, so shares. What are shares?
Shares is just a tiny piece of that company. So if you're thinking about like a pie chart, for example.
Right.
On that big pie chart, we use Walmart as an example. They have the different sectors. So they have the produce, they have the clothing, they have health and beauty, toys, etc. Those are the sectors. And then you can purchase shares in each sector.
Right. A share is just a piece of the company, guys. In layman's terms, it's
a fraction.
Imagine owning a small percentage of a business, right? And that's what they denominated as a share. Mm-hmm. Okay, so that's what shares basically are. They're also known as stocks or equities. And again, they represent a portion of ownership in a company. Okay. And then, of course, we just touched on that, publicly traded companies. So you have public companies and you have private companies, right? So a public company is basically, there's an acronym called IPO, which is initial public offering. That's usually what a company presents to the marketplace whenever they're going public, and basically inviting investors to come and own a percentage, a percentage of their company. A private company is not set up that way. They're not on the stock market, right?
It's not available for regular consumers to, or not consumers, but investors to invest in that company just yet.
Right. So again, I'm not going to throw any out right now simply because, again, this is educational. I don't want to give y'all any ideas on what to invest in. So just know that a public traded company is basically a company that is in the stock market and allows investors to come in and buy and sell shares, ownership into their company, guys. Okay. Mm-hmm. So that's basically in the gist of what the stock market is. Okay. So look, what we want to do next, and we want to discuss particularly for our audience, right? How we think you should plan and strategize if you want to invest in the stock market and also manage your own portfolio. Because that's one thing, I feel as though it's best to learn how to self-manage your own portfolio, simply because, guys, look, it's your money, right?
Nobody's going to treat your money like you do. So you should get educated on where your money is going, how your money is flowing, instead of just turning it over to someone else and putting all your trust in them.
And again, guys, like, look, we're going to touch on that here in a little bit. But again, I just feel like, you should at least know what's going on with your money, at the very least.
Right.
Just simply because nobody's going to pay attention to your money more than you, or at least I would assume, right? But anyways, so let's talk about this, like how you should plan and strategize, okay? If you're going to manage your own portfolio, right? Okay, so let's talk about it. So we have 12 bullet points that we want to touch on, okay? So the very first thing is educating yourself. Educating yourself, okay? Probably is the obvious thing that you should do, right? You need to begin by learning the basics of investing in stocks. There are numerous books, online courses, and websites that provide valuable information, understanding concepts like stocks, dividends, risk, and diversification, right? So that's basically how we started our journey as well. Again, we started in 2019. We had no idea what we were doing. So we took a step back, got on YouTube, started researching, people. Of course, we have to vet them out, figure out exactly who was credible, who wasn't. And then, of course, from there, piece by piece, we started getting,
I wasn't even a believer in the stock market at first.
Yeah, man. Check this out before we continue. I remember we actually had a debate. Well, yeah, it was like a debate. Remember, we was at a grad party one. Matter of fact, it's probably the same year.
Yeah.
And man, we were so gun ho about investing in real estate, right? And just didn't see the stock market as a place to go and make real money or build wealth. But again, guys, that's ignorance speaking, right? We were ignorant to the stock market at one point in time. So, to go from that to where we are now, man, we see the power in it, and it's a very, very valuable tool that can help. So
I'll tell you what sold me.
What's it?
Because initially my thought was whenever the value of the stocks go down, then I'm losing my shares. But you never actually lose the shares until you sell. Right. So once I learned that, I was like, oh, okay.
Yeah, cool. Yeah. That's one piece.
What's your analogy of like the shares going down in value, but you don't lose?
You only lose when you sell. Yeah. I don't know if I had an analogy for it, but I just said,
You had like I think
know.
it was
I'm
$1.
always hitting y'all with some analogies, though. But, excuse me.
It gave me an epiphany whenever you said it.
Oh, yeah. Well, I say so much dope stuff, though, so
anyways,
you just gotta know.
Okay.
All right, back to the video. Okay, so number 2, set clear goals. Set clear goals, right? Determine your investment goals. Are you looking to grow your wealth over time, over the long term, or generate income? Your goals will influence your investment strategy, right? So like for us, we're long-term investors. So we buy shares in companies and we hold them for the long term. Our objective is to try to get shares at a discounted price. We're going to go more into detail on what that means, but just remember that part. So that's our strategy. We also have to, we try to keep our portfolio balanced, right? Meaning that we don't want one position being more dominant than another position, right? But as far as our goals, our personal goals, just to give y'all an example, we're long-term investors. At some point in time, we'll start liquidating our shares to supplement our income. Right now, we're in the building stage. So everything we're purchasing is for the long term to carry us in retirement. Okay, so that's our goal. So that's just an idea of what y'all could think about if you're setting your goals. Number 3 is building an emergency fund.
Okay.
Emergency fund, however you want to summarize that. All right. So before you start investing, guys, you want to make sure you have an emergency fund that has enough money to cover, 3 to 6 months worth of living expense, just to provide a financial cushion in case of unexpected expenses. And I won't say in case, because they will happen.
Yeah.
So you definitely want to make sure you have, I really want to say you want to have a strong supplemental income, right? Not necessarily, you can have savings. Again, we talked on that on another video that we did, how to manage finances, I believe, right?
Yeah.
Or how we allocate our finances. Savings, again, we don't personally have a large sum of savings, but we have access to capital. We have usually a strong surplus at the end of each month. So in those situations when there is unexpected events, we have a way to, take care of that and also not have it affect our investment goals, right? So that's basically how I would sum up emergency fund. Do you agree with that?
Yeah, I agree.
Yeah. Okay, so number four bullet point, of course, is pay off high interest debt. Pay off high interest debt, right? We talked about this in good debt. Is that good or bad? I forget what episode that was, but if you look in our archive folder, you'll see it. Is that good or bad? Now, high interest debt, of course, if you have high interest debt like credit card balances, it's often advisable to pay them off before investing. High interest debt can erode your investment returns. We talked about that in that video, how it robs you from having the opportunity to invest. If you're paying high interest to a lender, credit card, etc., that's taking away that money that you should be getting a return on. So you definitely want to figure out a strategy on how to consolidate and eliminate that. If you want some tips on how to do that, we'll probably put it somewhere and click right here. We'll figure out how to do that. We'll figure it out. Click there and you can watch that video on how to eliminate or consolidate and reduce or eliminate your debt, right?
Yeah.
Okay, guys.
The higher the interest, the longer it usually takes to pay off that principal.
Yeah, high interest debt. That's the worst debt, by the way. That's bad debt. Okay. Right. So let's talk about number five. Number five, creating a budget. Creating a budget. Self-explanatory, right? Again, on that same video, we talked about a budget, right? Establishing a budget to manage your finances efficiently, right? Determine how much you can afford to invest regularly without jeopardizing your daily expenses and savings. Again, all books say 10%. I don't know why. That must have been the number that worked back in the day.
Yeah, I was about to say. That's obsolete.
We did the math. I actually did it. I forgot to put it in that video when we talked about how much we allocate, but I'll tell y'all right now, we're actually investing 45% of our income, guys. 45%, right? So that means we live on, the 55. That's how much we use for our living. And then, of course, the remainder, sometimes it does actually exceed that, but on average, it's 45%. So ask yourself that question. How much are you able to invest? Is it more than 10%? Is it even 10%? But, the rule of thumb is 10%. That's what most books recommend. Well, the cool
thing about it is once you start investing 10%, putting 10% aside for investing, it becomes like a game. Even for us, it did. Okay, we're able to invest this percent of our income in whatever vehicles we chose at that time.
Right.
But as we started doing it and building that habit, building that muscle, then it's like, okay, we can invest a little bit more. We can sacrifice in other areas, cut out these subscriptions, and now we're able to invest a little bit more. That was just an example.
Oh, yeah. Well, and then also another thing to mention, as you invest, when you're paying attention to your portfolio and you start seeing the gains or losses, but if you have gains and you start doing the math, you start asking yourself, man, if I would have, or you start talking to yourself like, man, if I would have bought 200 shares instead of 100 shares, I'd be double where I'm at, So you start thinking like that and you start, like she mentioned, figuring out ways you can sacrifice so you can have more income to invest and have a, higher rate of return, right? And we're going to talk on rate of returns and all that good stuff. Y'all just hanging up with us. We just trying to, literally dumb this down as if y'all have no idea what the stock market is. Because some of our viewers, guys, y'all may not know, right?
Yeah, and that's okay. Yeah, it's stock market 101.
This is 101,
level 1.
Right, so let's keep it rolling, right? So, okay, setting a budget. Okay, let's go to the next one. Number 6, choose an investment account. Choose an investment account, right? So you can just put, I don't know, however you want to summarize that. Investment account, right? So in order to invest in the stock market, guys, you will need a brokerage account, right? That's what it's classified as in order to buy and sell stocks, right? You have to research and select a reputable brokerage that aligns with your needs, whether it's a traditional brokerage or an online platform. What I usually recommend is go with a brokerage who has a great customer service, someone you can actually physically speak to. Some of these brokerages, I'm not throwing any names out there. I just highly recommend a brokerage where you can contact a real person and speak to them about your money, right? Some brokerages out there don't have that feature.
It's just email only.
Yeah, they're, email. You don't know if you're talking
feature.
to. Yeah.
If you're investing that type of money or any type of money, really, you want to be able to have access to a real person if you have questions.
That's one of our criteria, right? Yeah. I mean, someone who's reputable, right? Someone who has a long track record, a long historical record.
Some skin in the game.
Right. Of being a brokerage that's been here and reputable. So y'all do y'all's own research. Back to this, education. We're not going to advise you who to open your brokerage with. That we're going to leave that completely up to y'all. But do your research. But just know you need a brokerage in order to buy and sell shares of stocks, right?
Yeah.
Okay, guys. So let's keep it going. Number 7. Diversify your portfolio. Diversify your portfolio, right? So diversification, what does that mean? You don't want to put all your money in a single stock, right? You have to diversify your investments also across different sectors, asset classes, and spread the risk, right?
I was about to say diversify meaning spread out.
Exactly.
Put in different places.
Right. So like for instance with us, diversity is one of them things where it's like, like even when you listen to like a Warren Buffett, I want to say at one point he mentioned diversification is for people that don't understand the stock market, right? I get his point. See, his back to his goals and the way he is, what I've studied about Warren Buffett, he positions himself in business, right? He owns a significant portion of a business. And again, he looks at there's a stock market and then there's, like the market, the stock market is a whole marketplace, right?
Right.
But I wouldn't even say we invest in the stock market.
Versus what?
Well, we invest in companies, individual companies.
Okay.
Right?
Versus
I don't know if that made sense. Yeah, like an exchange traded fund. So like you can invest in the entire stock market if you want, right? There's index funds, which we're going to touch more on later. But if you want to you can be diversified if you just like basically what the meaning is. If you want to spread your investments out across the entire market and sectors. Mm-hmm. But I think we're going to talk more on being aggressive with like how to invest in, basically letting the index define what to invest in, right? So like if you look up ABC index, right? And in that index, you see there's top holdings in that index, and whichever company holds the most weight within that index, that may be one to look at, that particular company, right? Because they may have 100 different companies within this ABC index, but let the index define what to invest in, right?
That's our strategy.
That's kind of our strategy, right? But just know diversification. I get it. Like you want to have a little bit. It's not, and that's another thing. We diversify within different asset classes as well. Like again, we have real estate investments. We have stocks and stock market. We invest in the stock market,
cryptocurrency,
and we also have crypto. So I believe in diversifying that way. It's not like should I do stocks or should I do real estate or should I do crypto? No, you should do all of them. Yeah. You should do them all. Spread them out, and then also another thing is you should also have different type of brokerages. Like for instance, we have joint, we have Roth, right? Mm-hmm. Everybody should have a Roth. Let me pause real quick before we continue, guys. Look, we did our research on the Roth IRA. Roth IRAs, especially if you're in your 20s, man, I'm gonna do the math later. But guys, if you start investing in a Roth IRA, that's post-tax funds, right? Mm-hmm. Money that you already pay taxes on. There's a max that you can allocate into your Roth IRAs annually. I believe 2023's max, if you're under the age of 50, is $6,500 per person. Okay, so between the two of us, that's $13,000 total that we're able to allocate into that bucket. That's post-tax money, right? The great thing about a Roth is once you hit the age of 59 and a half, you now have access to that portfolio and those gains are tax-free. Right. Meaning you don't have to pay any capital gains tax. Highly, highly, highly. That's the easiest thing to do, by the way. Like you can set that up on autopilot. Man, look, at the end of the day, if that's all you do, you don't even have to, like, if you don't do, a joint account with your spouse, an individual account.
Investing in real estate, investing in
Right.
stocks.
At the very least, guys, this is like, do this, please.
This is like your own retirement account. Usually people's jobs set them up with one, but you want to be self-reliant. So,
well, the best part about it is it's tax free.
Yeah, that's
because think about it, man.
That is the best part. It's been helping us.
Man, look, we paid capital gains on stocks before. It sucks. Okay, but you got to have a plan on how to mitigate that, right? So that's something, it was a learning lesson for us, and now we know how to do that. But a Roth, you don't have to worry about that. And like I said, I know you got to wait till you're 59 and a half. It takes a while. But at the end of the day, guys, that's why I say don't that's not the only thing you have to do, right? That's one thing.
That's the cherry on top.
Yeah, man.
When you get to that age.
Yeah, like
God
you can
willing, you make it to 59 and a half, so you might as well.
I think that's what maybe deters people from wanting to do it. They're like, damn, I gotta wait that long time, 59 and a half, fucking enjoy
A lot of
this.
people aren't willing to.
You can't look at it like that. Because say God willing, you make it there and you didn't do it. Then what? Now you lost all your time. Now you lost all this time. You let all this time go by. And you made it to 59 and a half.
Investing.
And you missed out on all that compound interest.
You weren't willing to delay the gratification.
But the best part is the tax free, man. Because think about it. What do you think tax is going to be by the time you're 59 and a half? Think about that. You think it's going to be higher or lower?
Right.
Y'all know how
it's only going up.
Y'all know how the U.S. government go. So all you got to do is look today at inflation. So, guys, come on. Like, tax is going to be higher. If you have a tax-free portfolio, you're going to be good. Trust me. Y'all need to do that. Please set up a Roth IRA, especially if you're in your 20s. Do it. Trust me, guys. But back to the video. Or unless you have something else you want to talk on that. You good on that?
I'm good on it for now.
You agree? Roth IRA? Yeah. Roth, guys. Roth IRA. All right, bet. So let's keep it going. Diversification, number 8.
Can you set your kids up, Roths?
Yeah.
Okay.
Yeah, that's what I'm saying. Like, parents can do that. They can set up a Roth IRA.
I know you can set up
well.
a brokerage for your kids.
Well, the UTMA, UGMA, that's an account. That's a portfolio you can set up for children where you're basically, it's a custodial account.
Right.
But you can set them up a Roth IRA as well.
Okay.
Yeah. So, number 8, guys, start small. Start small. I'm a little conflicted with this. Start small. I don't really care. Simply, well, go ahead.
We kind of touched on it with starting with 10%. Like the books say 10%. So once you get into the habit, once you start building that muscle memory for the people who work out, muscle memory is like a common term used.
Yeah.
But basically, you're just building up that habit. Once you can do 10%, then you can start doing 15%, 20%. We're doing 45% minimum. So starting small, I don't see anything wrong with that.
You can start small, but you don't want to stay small.
Exactly.
There you go. Let's say it like that.
Yeah.
You can begin with an amount you're comfortable with and gradually increase your investments as you gain confidence and experience. Right. Something else maybe to consider if you're a little nervous about getting started, maybe consider starting with paper trading.
Yeah.
So there are...
What's paper trading?
Okay, so some brokerages allow you to basically simulate investing in the stock market. So they'll give you an account that has fake money, it's paper trading account. I know one brokerage in particular, I'm not going to call it out, but they give you $1 million paper trading. So that allows you to, participate paper trading in the market.
Just practice.
Practice, exactly. You can simulate doing the real thing before you actually do the real thing. That'll help you build up some confidence, and help
with
you
real
feel
public companies.
Exactly right. In real time.
Yeah.
So that's another tip. Or plan how to strategize in investing in the stock market, right? Number 9, let's keep it going. Develop a strategy. Develop a strategy, right? So decide on your investment strategy, whether it's a passive approach like index fund investing, like we mentioned earlier, or an active approach where you pick individual stocks. Research and analyze your investments carefully, right? So again, I'm not throwing any companies out there, but we will mention, like I said, there's ETFs, there's a portfolio of stocks that you can purchase in a basket.
Right.
Just like that, using the market analogy, you can go, shop, get a basket full of different variety things, or just go in there for one particular item, right? Same thing with the stock market. You can buy a basket of companies, or you can just buy a particular company that you want to invest in, and get more exposure to that particular company versus a slither of it if you have an ETF, right? So develop your strategy. Like I said, we have our strategy. We'll probably explain our strategy a little later. Not right now in this video, but just know you have to develop a strategy. You don't want to go into it not knowing what you want to do. Like we did in the beginning.
Right.
We basically made our own ETF with all the companies we were invested in. Right.
Yes.
Okay. Anything you want to touch on that before we continue?
No. That's
okay.
Cool.
All right. So number 10, monitor and adjust. Monitor and adjust. Right. So you want to keep an eye on your investments, right? Regularly, by the way, okay? That's where this requires more work. This is going to require, more of you managing your portfolio in order to monitor it, rebalancing your portfolio if necessary, and adjust your strategy as your financial goals change. That's something that's happened with us too.
I would say be careful with monitoring, because sometimes if you're looking at the stock market every day, you can get emotional towards it. True. Like, you get scared whenever the market drops or it's in the red.
It's a lot of noise.
Yeah.
Yeah, it's a lot of noise.
You want to pull out, or you get tempted to pull out.
Pull out. What you mean by that?
Like get out of the company.
Okay. I'm sorry. Go ahead, proceed.
Okay. Or
don't pull out. Go ahead.
I'm lost. Go ahead.
You said pull out the market. Yeah.
Right.
Right. Okay.
Don't sell whenever the market tanks. That's the time where it's on sale.
Don't pull out.
So that's like whenever certain companies that you like to shop at, or for example, if you see a sale sign, that makes you want to go purchase items. So just like in the stock market, whenever things are on sale, that's when you should be buying more.
Yeah. That's, I think this is by design. Like I watch a lot of CNBC on weekdays during the stock market, when the stock market's open. By the way, it's open 8:30 to 3 p.m. where we live. 8:30 a.m. to 3 p.m. Central time. Yeah, Central, right? It's a lot of noise, man. If you watch it, like she mentioned, every day, depending on what they're saying, they could frighten you. It could make you want to, exit the market, pull out. You don't want to do that. You want to stay in the market. You want to stay strong, stay long and strong. Don't pull out. And, when shares when they go down in value, that's actually, look at it as an opportunity.
Right.
That's the only place people run from when the market is going south. That's crazy. Like, let something go on sale, like you just mentioned. Yeah, let something go on sale, Best Buy, or, your electric store, clothing store, a purse, whatever, It goes on sale, you run into the market. Why you don't do that when your company's going on sale? I love when the market goes red, me personally, because I'm like, oh, bet, now I can get these shares even more at a lower price.
COVID, we definitely capitalized during COVID.
Man, that's what changed my whole perspective, We'll talk about that later though, but let's keep it going. We gotta stay focused on this video, right? Yeah. Okay, so we're on number 11. Number 11, stay informed. Stay informed.
Before we move on with monitor, we did hit on monitor briefly, but adjust. So we talked about earlier how it's like a pie chart. So you don't want to be overweighted. So I feel like that's where the adjustment comes in. If you notice that one of your companies, for example, has a higher weight, for example, if it's 50% and the other ones have like 20% in each company, that's just example numbers. Yeah. Then you want to rebalance your portfolio so that they're all equal.
Yeah. Just keeping it simple, like if you had two companies you're invested in, company A and company B, and your goal is to keep both these companies at 50% weighted each, that way they're equal. Let's say company A runs up, it has a great, quarter or whatever the case may be, and your shares outweigh company B. Right. Well, at some point, you may want to consider selling off some of those shares and then rebalancing the portfolio by buying back more shares of company B, just to keep it balanced. Because like she said, you have your portfolio is more dominant with one company. It's just you want to, like I said, that's just how we operate.
Yeah, that's just our strategy.
And I think most advisors would probably advise that you want to make sure you don't have one or multiple companies dominating your portfolio. Then you try to keep them all at least equally weighted as much as possible, right?
Right.
So yeah. So the next step or the next bullet point, you want to stay informed. Stay informed, right? Stay informed about the market trends, economic news, and the performance of your investments. Continuous learning is essential in the world of investing, right? So back to, like for instance, the market today. One factor in the market that's causing some of these companies to go bankrupt, lose a ton of market capitalization, is the Fed fund rate. Right. So we just had the Fed fund meeting recently where they did pause for this particular meeting. They didn't raise the rates. They didn't cut the rates. They're probably not going to cut rates for a while, by the way. But basically, the Fed fund rate is basically what the Feds control, what they're using to control inflation. That's what's making everything, as far as rates, interest rates for like mortgages and stuff like that go up, because the banks, credit unions borrow from the Fed, and they have to lend that money out at a higher rate in order for them to get a return on that investment. So the Fed fund is like 5.5. That's why you go to a bank or a credit union right now, and they're charging 7.5 to 8% for a mortgage.
Yeah, so they can profit.
Right. So that's one reason. That's one reason why you want to stay informed. Just, give you an idea of, knowing, same thing with the pandemic, right? When that occurred, sell off, people got nervous, people got scared. But for the smart investors, that was buying opportunities, right? So, sometimes, bad news is good news in the stock market. It's crazy.
It weeds out the bad apples.
Yeah, but anyway, so, and last but not least, guys, number 12, you must be patient. Be patient, right? We live in that microwave,
society.
ready in 2 minute society. Our attention span is terrible. Even like with shorts, like some of y'all, man, y'all like watching shorts more than the whole content. Like, that's just the environment we're in right now, right?
Yeah.
I mean, I was watching something recently. They said humans have the attention span. They said goldfishes actually have a longer attention span than humans now. That's crazy.
That is crazy.
And their attention span is like 2 seconds. So they just tell you how humans are going nowadays. It's crazy. So anyway, guys, being patient, investing is a long-term endeavor, right? Don't let short-term market fluctuations deter you. Stick to your plan and stay focused on your goals, okay? It can be, that's why I say, managing your own portfolio, you got to be emotionally balanced to do this. It takes, a lot of, emotional restraint from,
discipline.
Yeah, extreme discipline, right? In order, if this is something that you want to do for yourself, just know you're going to have that trait. You're going to have to be able to be disciplined,
right.
And know how to weather the storm in these different, when the market have these different fluctuations, right? Anything you want to say on any of these? Which one you think is probably the most important? Planning and strategizing. No, I mean like out of the 12, in your opinion. Oh, the strategize part.
Strategize, because I was thinking about, I hear whenever I talk to people about the stock market, the first thing that they say is trading.
Yeah.
So they only know trading. Or even whenever I'm talking to people about real estate investing, they think straight to, not trading real estate, but fix and flip.
Yeah.
So there's a market for everything. I'm not saying that one is above the other. However, like long and steady wins the race. Slow and steady wins the race.
Yeah. So. And there's other ways, like there's so many avenues that you can create income and invest in the stock market. Like we even have some call options going right now. So there's options, there's, puts, there's calls, there's short selling. There's a million, trade. Like there's so many different ways you can make money.
Right.
You can do multiple strategies, by the way. But I highly recommend you have a long-term play in addition to trading. There's nothing wrong with trading. Just know that I don't personally like trading because I'm gonna be honest. I suck at it. I'm not good at it. I tried it with a little bit of capital we had, and it didn't work out too well. So, but I tell you one thing: a long-term strategy that's definitely working.
It's not sexy.
Nah.
Like it takes a lot of delayed gratification, like we mentioned earlier.
You want to be long, strong, and don't pull out.
That's
long,
right.
Strong, and don't pull out, right? Yeah. So, go ahead. I'm sorry, I cut you off.
Well, that's a good way to end it.
Oh, now we got a little bit more to go.
Okay.
All right. Go ahead. I'm sorry.
But yeah, basically, buy and hold is not necessarily the sexy thing to do because, like, you're just putting the money in the market or in the companies that you're purchasing the shares and just kind of waiting around whatever that timeline is for you.
Yeah.
Like we have a longer timeline. We set it out to 10 years at least.
Well, there's different stages within this video is not dedicated to that, but we'll just speak on it real quick. So we have different stages of what we're going to do with our portfolio. Like there's going to be a stage where we're going to start supplementing our income out of our portfolio, but we're also going to continue to reinvest. And then of course we're going to build a more desirable lifestyle from there, right? But that's a whole nother video in itself. We'll talk more about that when we get to that, when we cross that bridge. So just to sum this up, right? Just remember, guys, that investing in the stock market carries inherent risk, and it is possible you'll lose money. It's essential to be patient, well-informed, and consider seeking advice from financial professionals if needed. So I will say if this is overwhelming for you, if you want to invest in the stock market and you don't want to do it on your own, you can hire a fiduciary, right? Someone who works at an actual broker, a brokerage company, not throwing any names out there, do your own research. So there's people that say, hey, you know what, man, I don't think I want to do this on my own. I want to just give it to someone and let them manage my portfolio.
If that's you, that's fine.
And that's fine. There's
However,
nothing wrong
we
with
do
that,
recommend, again, doing your own research so that at least if somebody else is managing your portfolio for the time being, maybe in the beginning, you can at some point take it over or you can manage the manager.
My only thing with the managers, guys, they're going to make commissions regardless. They're going to make money regardless. Whether your portfolio is going positive or negative, there's fees, right? There's a lot of fees associated with having a broker or, a fiduciary. That's how they make money though, So, I would say if you're like ultra high net worth individual, maybe you can consider going that route. But if you're somebody, that's not making, anywhere in the neighborhood of, I would say probably 250K or more, or less. If you're making 250K or less, you probably don't need a fiduciary, in my opinion. Because the fees are going to eat away your returns. Just being honest.
Yeah.
This is my own opinion, by the way. So if y'all don't like it, I don't, it is what it is, man. That's just my personal opinion. Because high net worth individuals, usually they don't have the time to just do all this on their own. They don't, they may have the time. It's just our personal preference, But just know that, just know what comes with having someone doing the managing for your portfolio. Know what the expense ratios are. Know what the management fees are. Again, there's some level of having to know what's going on with your money. You have to understand, if you're going to have somebody do it, know what the fees are, or if you're going to do it yourself, know how to invest, right? And it's a learning curve,
I think that's how you learn the best, by jumping in it, figuring it out. And like we said earlier, paper trading is very effective.
Right.
Because you can practice in the market as if you're doing it with real money, but it's just with fake money.
Exactly.
So I highly recommend starting with paper trading.
Yeah, it's a good idea. I agree with that. So, okay, guys. So look, this is pretty much the end of this video. So look, this whole month, October, y'all stick with us because we're gonna be deep diving more and more every day in regards to the stock market. This was, like I say, literally just like an introduction to the stock market and how we believe you should strategize to plan if you want to invest in the stock market on your own, which a lot of people, in my opinion, want to. Like, I get a lot of people that's curious about the stock market and want to invest on their own. And, you know, so that's why we're doing this. You know, we're trying to just, you know, reach the masses and educate, you know, and hope we give y'all some kind of value, right? So what's the exercise we should give them today before we leave?
How about research two brokerages, two or three brokerages to see the differences, like see which one fits your strategy.
Yeah, there you go. That's a good idea. So if you
and
are
Roth IRAs.
And Roth IRA, yeah. Okay, guys, so that's going to be the exercise. So we want y'all to go and if you don't already have a broker set up, consider researching some brokerages. And whenever you come back to the next video that we're going to do next week, that's actually what we're going to touch more on, setting up an actual brokerage account. That's going to be the next video. So guys, y'all stay tuned for that. And again, you know, go ahead and subscribe if you haven't. Like the video, comment below. Share with a friend, family member, coworker, whoever, a stranger.
We have been getting some questions. We appreciate your questions because if you don't know, I mean, we don't know what we don't know. So we're here to be a resource to you. We're still learning ourselves, but if there's something that we can help you with, ask your questions. Yeah,
exactly. So also go to our Instagram, Marriage, Money, and Mindset, and follow us there as well. Yeah, guys, so y'all stay with us, man. End of the month, we got a little treat for y'all, right? So y'all stay tuned for that as well. I'm not going to say it right now. I'm just going to wait. You're just going to have to see and wait and see what it's going to be. But yeah, we appreciate y'all for tuning in for this week's episode. We hope y'all have a great week. We hope y'all have a great end of the year, the last quarter, 2023. Hey, man, y'all go out strong. Let's get this money. Let's get these accounts. Let's get these brokerages. And let's end it with a bang. So we're going to get on out of here. We're going to see y'all next week. Peace.